But at the end of the day, they still have their money. All the people that bet on JPEGs and meme coins are poorer now, unless they were the handful of sharks at the top. They were basically shilling it and cashing out at the top, and those kind of sharks make money, but most people lose money, and then it kind of goes back to stability. So I think that's kind of part of something that it has to go through.
Despite the rising demand for Bitcoin through the 12 approved spot Bitcoin ETFs in the US, many investors are still wary of these products and their impact on the leading cryptocurrency network, and its native coin critics have raised the issue of centralization co-opting Bitcoin and leaving it open to confiscation risks later in the future. While renowned investment strategist and macro analyst Lyn Alden acknowledges some of these, senior Bloomberg ETF analyst Eric Balchunas updates the ETF's market confidence in the cryptocurrency market has dropped in recent weeks. Yet BlackRock's IBIT and other Bitcoin ETFs continue to break records and expectations. Eric recently shared another important record for IBIT and 3 other Bitcoin ETFs in a post that reads, IBIT ended up with 414 reported holders in its first 13F season, which is mind-boggling, blows away records. Even having 20 holders as a newborn is highly rare. Here's a look at how the Bitcoin ETFs compared to other ETFs. Launched in January, in this metric he accompanies the post with a chart showing the number of holders for 20 ETFs.
One, I view that this period is fairly inevitable, and any asset that becomes $1 trillion liquid asset is going to get ETFs built on it in some jurisdictions. And in the United States case, we have some degree of separation of powers. And so even though the SEC didn't particularly want this, they lost in court. And so people want this. And so now more people can access it. There are pools of capital that, there's retirement accounts, there's managed assets, and a lot of them have not been able to access it. And now they can. So, and there's like imbalances built up. So the fact that they could only access it with like grayscale has been an issue. And now there's kind of like this big release valve where a lot of capital can finally get out of that big entrapment and move to other places that are kind of more professionally managed or cheaper and things like that. So I think that's a process that's inevitable. I think concerns around centralization are somewhat overblown. Not to say that they shouldn't be brought up, but basically I think that there already was a pretty big chunk of Bitcoin sitting in Grayscale. Now it's rotating into BlackRock and Fidelity and a few others. The overall pie is growing moderately that's in those environments. A lot of people in those environments, they prefer that. Whereas I think it's important to say make self-custody reasonably easy for people to make sure people understand the risks. But I think, again, it's just people have more optionality now. There are a lot of people that wanted to have Bitcoin in their 401k and couldn't. Now they have more options, or they have assets with an RIA, and he or she is just unable or unwilling to put some of that money into Bitcoin. Now they can. And so I think that's inevitable. Even if it's not good or bad, it's just inevitable, right? So it's not like I see people saying, oh, Bitcoin deviated from its mission because ETFs exist for it now. Well, it's like, well, Bitcoin didn't make the ETFs. The fiat system made ETFs for Bitcoin. And that's basically the fiat system upgraded its APIs to plug Bitcoin in this method. ETFs are basically an API into different asset classes. They decided to plug into Bitcoin now. And, you watch out for big centralized honeypots, whether it's ETFs, whether it's Binance, whenever a lot of Bitcoin are in one big custodian, that is a risk. So right now, a lot of them are in Coinbase. I consider that not ideal. So I think people should be cautious about that. If you're going to hold ETFs, you probably should diversify across custodians. But I also think that it's good to take self-custody. And so we'll see where that shakeouts over time. But I think that that's just an inevitable stage that Bitcoin was always going to go through if it was ever going to get as big as it has now. I think there's a risk, but I view it as overblown because I view Bitcoin as well designed as is. It has a block size limit for a reason. And, I think that basically the market forces will play out. I think, basically, if you view what Bitcoin is the most immutable and decentralized database we've ever made as humanity. I think the biggest killer use case for that is money. If you have a really good decentralized open ledger, money is like by far the biggest addressable market for that. That's like $100 trillion market in today's dollar terms. It's a massive market. The total addressable market for that, in theory, is huge. And you can use that. You can you can timestamp other things to prove that they were not changed. You can use for speculative meme tokens. I think most of those I mean, that's at most a few $1 trillion market, non-monetary use cases for the most immutable database. I think that over the long arc of time, the monetary use case is way more denser. It's a way bigger market, and it pushes that aside. I think that while Bitcoin gets adopted, as it goes through, as more people look at it and figure out things they can do with it, it goes through these manias, it goes through fads. I think they burn themselves out over time. We see when you look at the altcoin space, you go through this boom for a period, and then we forget that narrative. We go to the next big boom, then we forget about that narrative. We go to the next big boom. Now, kind of the current cycle is nothing particularly new, but taking some of that other stuff and putting it on Bitcoin. I think this is going to go through a big boom, and then that kind of washes itself out. And I'm sure someone will think of the next thing, and it will go through that fad, and that can be disruptive while it happens. But I think that ultimately that it's not particularly economic. If people want to, if there's demand for meme coins, there's an endless supply of meme coins that come to the market until they saturate that demand. And then all those people that bought meme coins basically get poor. And then the money flows to the miners. And it's annoying for people that are trying to use Bitcoin monetarily for that period of time. But at the end of the day, they still have their money. All the people that bet on JPEGs and meme coins are poorer now, unless they were the handful of sharks at the top. They were basically shilling it and cashing out at the top. And, those kind of sharks make money, but most people lose money. And then it kind of goes back to stability. So I think that's kind of part of something that it has to go through.
There were no institutional investors in Bitcoin for the first 15 years, but Bitcoin ETFs have helped open the rails to thousands of them. Prices are already starting to reflect this. Eric says that Millennium Management LLC, one of the biggest investment management firms in the world, has put about $2 billion into Bitcoin ETFs. The tweet says, Millennium is the king of the Bitcoin ETF holders with about $2 billion across 4 ETFs. This is out of over 500 holders, about 200 times the average for a new ETF. The majority are investment advisors 60%, but there are also a lot of hedge funds 25%. A recent SEC filing shows that Millennium Management has about 3% of its $64 billion fund invested in Bitcoin. ETF holdings with BlackRock, ARK21, Fidelity, and Grayscale. The global investment management firm holds over $844 million in ETF shares under BlackRock and another $800 million in Fidelity FBTC. It's impossible to know what hedge funds are doing, but they were definitely big buyers. Eric points out that the first 13 FS include people from almost every type of institution, such as hedge fund managers, financial advisors and family businesses, insurance firms, and pension funds. Since last year, analysts have been predicting this moment, and it's getting even bigger than they thought it would be. Let's go back to Lyn Alden's talk.
So, I agree. The way I would phrase it is that Bitcoin is really good money, but it's not perfect money. There's certain limitations with say scaling, certain limitations with fungibility, which impact privacy to varying degrees. And there's tools that can overcome that on higher layers. If a lot of people buy into, say, ordinal theory, and they say, okay, this is the quote unquote ordering of sats that we agree with, that does give chain analysis companies a lot of tools and incentives. I think, unfortunately, over the next decade, they're already going to have a lot of tools and incentives because governments have a lot of tools and incentives to surveil all this as best they can. And, for people that follow my macro work, I'm focused a lot on the topic of fiscal dominance, which is that a lot of debt is now on the public ledger for governments, sovereign debts. And they get in a situation where, if they keep interest rates low, they risk inflation. And if they raise interest rates, they actually blow out their deficits even more and fuel inflation in a different way. And so historically, what countries do when they get to that situation is they turn to capital controls. They try to say, well, banks are controlled now and brokers are controlled now, and you can't buy this type of security, you can't buy this type of asset, or gold's illegal to own, or foreign currency is legal to own, and they turn to all those things. And Bitcoin is a it's a release valve for that, right? It's portable capital, and if you're trying to do capital controls, you don't particularly like the fact that exists, or if it does exist, you want to surveil it as much as possible, so that if some billionaire or some company starts, putting a lot of capital there and then trying to evade the fact that all the inflation's happening, they can go to that entity and be like, well, we're going to tax you by 20% to recoup some of the value that you escaped from the inflation with, or we're just going to confiscate your coins, whatever the case may be. And so governments have a lot of incentive to try to do that. And so I think, ordinal theory or not, just chain analysis is going to be a problem for the next 5-10 years. I've been saying that I think privacy is the biggest kind of battleground in this space going forward. And I think it's not something that's going to be won a year or two from now. I think that's going to be a long-term issue. That's also why I think public education is important. Like propaganda works, right? If you tell people, look, like our currency is broken because there's outside entities attacking it, that a lot of emerging markets will use that line. Or, hey, like, our currency is working, but all these Bitcoiners are greedy and they're, the fact that they're, not buying into our money is breaking our money now. And like, we got to go and tax those, right? Those narratives can work, unfortunately. And so that's actually why I think Bitcoin education is so important, that you need enough knowledge out there that as the government tries to apply these different types of tools, that there's sufficient pushback among the populace for them. But I do think that, tech aside, that's just an era that we're going to go through now. And so I kind of take that for that's an axiom that I start with, that we are going through an era where Bitcoin does have fungibility limitations. Governments are going to try to exploit those in any way they can. And therefore, I think it's good to build privacy tech on top of Bitcoin. And also, I think it's good to educate the public around why privacy is good, why being able to own non-debasable money is good, why the government should not have a right to do X, Y, and Z, because it helps. There's a social defense then against, large overreach in that area.
In her previous interviews, Alden often talked about a scary future where higher levels of background inflation become normal for Americans, just like they are for Egyptians, Nigerians, and Venezuelans right now. According to a famous financial analyst, this grim future could be as close as 5 to 10 years away. When it finally happens, Alden is sure that everyone, even the current doubters, will have no choice but to switch to cryptocurrencies like Bitcoin. Do you agree that Bitcoin could be the only asset that can end all the centralization and level the playing field for everyone? Please share your thoughts on Alden's interview and Eric's tweets below, and like the video. Follow the channel and turn on post notifications to see more movies. Thanks for showing up.